Welcome to Everyday Finance, where we break down money tips into simple, everyday steps you can actually use. Whether you're budgeting, saving, or just trying to make sense of your finances, you're in the right place. Your credit score is more than just a number, it's a key to financial opportunities. Let's demystify credit scores and learn how to enhance them. Alright, let's talk about credit scores. You know that thing that feels like a judgmental report card for your finances? Yeah, we're diving deep into that. First things first, your credit score is a 3-digit number that typically ranges from 300 to 850. Think of it like this: the higher the score, the more trustworthy you appear to lenders. That's because your credit score is a direct reflection of your credit worthiness. Basically, how likely you are to repay borrowed money responsibly. Now you might be thinking, why should I even care about this magical number? Well, here's the deal. A good credit score is your golden ticket to unlocking some pretty sweet financial perks. We're talking about lower interest rates on loans, better credit card terms, and even a leg up when you're renting an apartment. A higher score tells lenders, landlords, and even potential employers that you're responsible with your money. That translates into lower risk for them, which often means better rates and terms for you. On the flip side, a lower credit score can seriously limit your financial options. Imagine having to pay higher interest rates on a car loan, or struggling to get approved for an apartment just because of a less than ideal credit history. Not fun, right? But don't stress out just yet. Understanding how credit scores work is the first step towards building a strong credit history and reaping those sweet, sweet financial benefits. Check one, check. Okay, let's break down this credit score thing even further. You see, your credit score isn't just some random number pulled out of a hat. It's actually calculated based on 5 key factors, each carrying a different weight. Think of it like a recipe, with each ingredient contributing to the final flavor. The most influential ingredient, making up a whopping 35% of your score, is your payment history. This one's pretty straightforward. Paying your bills on time, every time, is the single most important thing you can do to boost your credit score. Late payments, missed payments, or even collections can really drag your score down. So set those reminders and prioritize those due dates. Next up, we've got credit utilization, accounting for 30% of your score. This refers to how much of your available credit you're actually using. The golden rule here is to keep your credit utilization below 30%. Maxing out your credit cards might feel good in the moment, but trust me, it sends major red flags to lenders and can tank your score. Coming in at 15% is the length of your credit history. The longer you've been responsibly managing credit, the better. This is why it's a good idea to start building credit early on, even if it's just with a small credit card or a secured card. Taking up 10% each, we've got credit mix and new credit. Credit mix refers to the different types of credit you have, like credit cards, installment loans, or mortgages. Having a healthy mix shows lenders you can handle different types of debt responsibly. New credit, on the other hand, refers to how often you're applying for new credit. Each time you apply for a new credit card or loan, a hard inquiry is made on your credit report, which can temporarily lower your score. It's best to space out your credit applications and avoid applying for too much credit at once. Alright, enough with the technical stuff. Let's get to the part you've all been waiting for: how to actually improve your credit score. Because let's face it, a better score means more financial freedom, and who doesn't want that? First and foremost, and I can't stress this enough, pay your bills on time. This single habit holds the most weight in determining your credit worthiness. Set up automatic payments, calendar reminders, whatever it takes, just make sure those bills are paid on time, every time. Next, let's talk about credit utilization. Remember, keeping it below 30% is key. If you're even close to maxing out your credit cards, consider paying down your balances aggressively, or even asking for a credit limit increase to improve your credit utilization ratio. Now let's talk about the long game. Maintaining long-standing accounts demonstrates financial stability to lenders. If you have old credit cards you don't use anymore, don't be so quick to close them. As long as they don't have annual fees eating into your wallet, keeping them open can actually help your score by showing a longer credit history. And let's talk about those tempting credit card offers that flood your mailbox. It's easy to get caught up in the excitement of sign-up bonuses and rewards points, but applying for too much credit at once can send your score plummeting. Each hard inquiry can ding your score, so be strategic and space out your credit applications. Finally, diversify your credit mix. Having a variety of credit accounts such as credit cards, installment loans, or even a mortgage can actually be beneficial for your score. It shows lenders you can manage different types of debt responsibly. By following these simple, yet effective strategies, you can take control of your credit score and pave the way for a brighter financial future. Now you might be thinking, great, I'm working on improving my credit score, but how do I actually track my progress? Well, that's where credit monitoring comes in. It's like having a personal finance assistant, keeping tabs on your credit report so you don't have to. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, every 12 months. That's right, once a year you can get a detailed snapshot of your credit history absolutely free. I highly recommend taking advantage of this and checking your reports regularly. While you're reviewing your reports, pay close attention to any inaccuracies or errors. It happens more often than you might think. And even small mistakes can negatively impact your score. If you spot anything fishy, don't hesitate to dispute it with the respective credit bureau. They're legally obligated to investigate and correct any errors, so don't be afraid to exercise your rights. In addition to your free annual reports, there are also plenty of credit monitoring services available that provide more frequent updates and alerts. Some even offer identity theft protection and other perks. While these services can be helpful, it's important to weigh the costs and benefits before signing up. Remember, knowledge is power, and when it comes to your credit score, staying informed is crucial. By monitoring your credit regularly, you can catch any potential issues early on and maintain a healthy credit history. As we wrap up, let's take a moment to appreciate how far we've come. We've demystified the world of credit scores, uncovered the secrets to improving them, and empowered ourselves with the knowledge to make smarter financial decisions. And trust me, that's something to be proud of. Understanding your credit score is like unlocking a secret level in the game of personal finance. It opens doors to financial opportunities you might not have even known existed. Lower interest rates, better loan terms, increased purchasing power, it's all within reach when you prioritize your credit health. Remember, your credit score isn't just a number, it's a reflection of your financial habits and your commitment to building a secure future. By taking control of your credit today, you're setting yourself up for a brighter, more financially secure tomorrow. Now go out there and make those credit score dreams a reality. That's it for today's video on credit scores. I hope you found it helpful and informative. Remember, building and maintaining good credit is a marathon, not a sprint. So be patient, stay consistent with those positive financial habits, and you'll reap the rewards in the long run. If you enjoyed this video and want to see more content like this in the future, be sure to give it a thumbs up and subscribe to my channel. And don't forget to hit that notification bell so you don't miss out on any future uploads. Thanks for watching, and I'll see you in the next one.